Hi there, this is Bill with Smart Trades. It's August 19th, Thursday around 10:20 Pacific time. And today I want to do a quick review of our various scenarios that we've been looking at and the current market action, and particularly in the stock indices. And we'll take a look at the dollar as well. Um, right off the top, here's the the favored count that I had been looking at for some time. We had looked at the 1130, 1135 area as resistance, and indeed you can see the count. We hit just shy of the 1130 area, and from there, I think this best counts as an impulse down and a corrective rally back up. I'll also bring your attention to possible triangle here, which is indicative of a fourth wave, um, and also the divergences. I don't use regular oscillators. I think they tend to produce lots of false signals, and everybody's looking at them, and most people are losing. So if you're looking at what everybody else is looking at, you're probably looking at the wrong thing. At any rate, the advanced decline line, what I like to do is look at the NYSE advancing issues as a surrogate for the entire AD line, and here it is. Again, you can see here on this new low that we made on the S&P cash, we made a higher low on the NYSE advancing issues. Conversely, when we were rallying here, we didn't quite make a new high on the S&P cash, and but we came way lower. We came a lot less close to making a new high on the advanced decline line. And you can see the red arrow, obviously, and the red line, and I look at that as a bearish divergence, and generally speaking, a setup to possibly sell into. And conversely, again, on the bottom here, that bullish type divergence is a buy setup, at least on the short term. These are hourly charts, obviously. Anyway, um, here's the spiders, and a little more detail on the count, and also various alternate counts. Again, this is a possible ABC down here. We still haven't made a new low. I think I favor that a little less at this point because of the volume on this decline. But the other scenario is that we have still an ongoing corrective rally. You can see here in the dark red labels A up, and that this decline is B, and that a C wave will take us back to closer to our ideal secondary target around 1111, 111 on the spiders. Again, there's that triangle. You can clearly see what I've labeled 5 waves down to 1. In the case of the spiders, this best counts as a ABC rally back up, and then a possible 1-2 to the downside, or this could be a failure perhaps. And again, here's the increase in volume, and I think you have to respect that a rally back, perhaps to 1108, or 108. I'm getting my S&Ps and spiders mixed up here. 108 or 109 is an area to watch for possible corrective failure. And now, obviously, if we start flying to the upside and go right through those levels, I'm probably wrong about this being a short-term top, but for now, I think that's the better assumption given the bigger picture. Here's the NASDAQ 100. And again, here's those advanced decline line divergences. Here's the bullish one and the rally. And in this case, we actually did make a new high on the NASDAQ relative to the prior peak, and there's the bearish divergence. In this case, I'm using the NASDAQ advancing issues rather than the NYSE. They tend to be pretty similar, and particularly in terms of pattern. But the basic idea is still the same. Basically looking for divergences, and then you look for a shorter term setup. Reviewing the count, pretty clear here, pretty nice impulse to the downside. One down, an ABC 2. Third wave down with very bearish breadth. Breadth improved both on the wave 1 low and the B low. And this count is different from the spiders in that and the S&P. I think this best counts as an ABC decline here, and so you've got A up, ABC B down, and then you can count 5 waves up for 2. some folks will notice that there's a possible overlap here, but if you count one as up to here and then this decline as an expanding flat, that eliminates the overlap. And again, a nice clean 5 up for possibly C of 2. A breakout above those highs, the recent highs, negates this count and probably means that we're in a larger wave 2, or possibly, as I've noted before, actually continuing with the B wave rally. One thing of note here, some folks have looked at this count and called this the 5th wave. I think that's really, an inappropriate application of Elliott and fractal analysis in general. You want to make sure that your impulses and corrections and various components are of similar magnitude, that they relate to each other. That you're not comparing the leaves of the tree to the trunk, so to speak, in terms of fractal analysis. And I think that this best counts. Again, you can see all the internals here, and you can clearly see that this can be counted as 5 down to this point. And again, there's your ABC with nice clean divergences at all the major turns, basis the breadth ratios. Now here's something I posted privately, so I'm not going to take credit for the call here, but we did have resistance pegged in the 625, 630 area, basis the Russell 2000, and that area was both a 1.62A times A and 38% of this recent decline. Also noted that the possible scenario of next resistance would be up around the 640 level. But I'd like to bring your attention to this nice little baby head and shoulders that was made there right at that previous resistance, and also the way that the market spiked through that resistance but was unable to close above there on the 240-minute chart. I'd like to use the 240 when I'm looking at 24-hour data. It kind of mitigates some of the really short-term oddities you'll see in the data. And finally, here's the dollar index. To me, the dollar index looks like it wants to make one more pulse down, corrective down. Now, how that's going to work out, with the stock market, it's hard to say. If we rally right through the top of this B, I'm probably wrong, and this little correction is already done. But there's a pretty nice target here. Assuming that this is A or 1 up, we've got A down, B back up. 62% of this entire rally comes in around the 81.40 mark, and an A equals C, A, B, C, comes in just above the 81.50 area. So 81.40 to 81.60, that's a previous set of swing highs. There's swing highs just below that area, and that was support on the way down as well. So I do like that area around 81.50. If the market goes plunging through there, that's a sign of a weakness, obviously. But if we were to get an ABC into that zone and it held, I'd look very closely at the long side of the dollar there. Anyway, that's it for now. Hope you're having a good one, and talk to you soon.